I'd like everybody to join me in welcoming Mario Innecco, and we'll talk about some areas where we're both interested in the financial markets, including gold and silver. And this is an area where Mario has a much stronger background than I do, in large part because he's been recently living in kind of what's been sort of the center of gold and silver over in London and England. And so on that basis, we look forward to having a good discussion. Thank you, Mario, for joining us.
You're welcome, and thank you for having me on.
Well, let's start with some questions. I think both of us are quite intrigued with what's going on in gold and perhaps particularly silver. So give us a little of your sense of what the outlook is for the silver market, and we'll kind of go from there.
Yeah, I mean, silver had been for like 45 years since 1980, frustrating silver investors. I mean, it went to 50 in January 1980, and then it languished for like 20 years. And I remember when I started buying silver in '03, started buying gold in '02. Silver was only like $4 or $5. So it wasn't going anywhere. It was a tenth of the price that it reached in 1980. And then in 2011, we went up to 50. And then it disappointed people again. And then finally, last year, it took off. It broke like 30, it broke 35. And more recently, it went through 50. And I've spoken about this on my channel. We had this 45-year technical formation called a cup and handle, which is very bullish. I mean, it's the longest and biggest I've seen in technical analysis, the silver one. And yeah, we broke through it in October or maybe a little earlier. It went to 54 and then it corrected sharply. Back down to like 46 or 7, but that's normal if you follow technical analysis. A lot of times when you break like a key level, the market flies or goes down on the downside, but then it comes back to retest that level, which is actually quite constructive, and it did that. And now, I mean, as we speak here today, we're at 76. And we've been as high as 84. And I think right now what's going on is the big bullion banks, they're based in New York, London, and maybe Paris, Frankfurt. For some reason, they like to keep silver under control. I think it's because silver is more of also a monetary metal. And I think the bankers realize that if silver is going crazy to the upside, people will wake up to the fact that there's something wrong. After all, up until the 60s, most countries still use silver for their coinage. So yeah, that's how I see silver. And I think it's going to continue a lot higher because this breakout of this 45-year formation is very bullish.
You just mentioned some of the banks, and I guess the one I read about that's so involved, among others, is J.P. Morgan. And what some people are saying, I don't know the truth of this, is that J.P. Morgan at least has been very short of silver, and one of the big concerns, obviously, is with this kind of a gain of the price of silver, they could run into financial trouble. How important do you think that aspect of it is to why silver has been suppressed recently?
Yeah, I mean, I think JP Morgan was involved in 2011, capping silver at 50. And yet they probably do have a short position in the futures. But I've also read that they're long the physical quite a bit. So a lot of these banks, they play both sides, but I think they also, right now, some of the other big banks, they're trying to cap it, take the price down again, because there's a lot of entities out there, especially like the BRICS central banks, India. They want physical silver, not just for monetary reasons, but also for industrial reasons, electrification and all that. And as you probably know, there's been a silver deficit for the last at least 5 years. What that means is that there's more demand annually than the global production. So that's starting to catch up. and there's not that much many primary silver mines. It's usually a byproduct of like copper and other base metals, and
Yes.
it takes years to get from like exploring, drilling for to see if there's silver, and then building a mine. So it's going to be years before supply catches up. And I think, yeah, the bullion banks, yeah, they have this big short position. I don't know which bank it is. I mean, speculation, it could be Citibank or even Bank of America. But yeah, for some reason, they keep shorting. But JP Morgan, I think, yeah, they're kind of playing the long side. And I think also Jim Sinclair, I don't know if you heard of him, he passed away a few years ago. He said that eventually in the gold and silver next huge big bull market, and I think we're entering it, he said the banks are going to go long. But yeah, I think it's a new world out there in terms of silver because the silver market in New York and London, it was more of a like speculative market where people were just playing the price and taking the profits in fiat dollars. But now people want the real silver, and that's really, I think, is one of the big reasons why silver has taken off and will continue to do so.
Well, one of that in answer to what you just said, I've been looking at the crypto and Bitcoin, and actually got so far as to recommend one of the companies that's big in Bitcoin, called Strategy. Think this it's overpriced, and I think it may go down. But what do you think of the idea that a large, I think the number is still 2 trillion or so in the crypto market, that a lot of people who made big money speculating in Bitcoin successfully, and now in the last month or two, Bitcoin and silver have gone in opposite directions.
Yeah.
How important do you think, as a factor in why silver will go higher, is that people who will sell their Bitcoins and switch to silver? How important an aspect of an up move in the silver do you think that could be?
Yeah, despite the fact that you see a lot of like the Bitcoin maximalists on X or Twitter, they denigrate silver and stuff. Maybe a lot of them are bots. I agree with you. There will be a lot of people who've done really well in Bitcoin who know about silver and gold, about sound money, because originally that's what Bitcoin was supposed to be, like a digital sound money. So if Bitcoin isn't doing well, yeah, I'm sure a few people will take some profit in Bitcoin and go into silver and gold because silver and gold are moving. Bitcoin was down last year, I think a few percent, and silver was up almost 150%. So they lost out a lot. So I wouldn't be surprised if they move over not just to silver, but also gold.
One thing is I've been looking at the silver market, is trying to figure out how high it could go, because we've got some new factors, as you know better than me, such as what's going on with the currency and the BRICS, being involved, and then all the interest in terms of China and I guess now India in the silver market. I listened to a guy, I've never met him, who impresses me, Rick Rule, and what he said in one of his videos was that he knows when we'll have the peak in silver, and it will be when so many owners in India start moving to the coin stores in India and selling their silver to get paper currency. What do you think of that kind of comment as a good idea of saying, until that happens, we haven't seen the peak in silver?
Yeah, I'm not, I know that Indians love gold and they keep it as an heirloom, as jewelry and like uh, not necessarily coins, and maybe silver, the same thing. And I think a lot of the silver in India has been used for industrial use, electrification. The Indians still don't use as much electricity as the first world countries, so to speak. But one thing I think that could tell where we are in terms of the top in silver would be the gold silver ratio. If we, go through 30, which was the low in 2011, and
Okay.
then 15 to 1 comes into the into vision. And so yeah, and it will depend, I guess, where gold is. If gold is at,
What's the latest? Is that around 60 now?
yeah, around 60. I haven't checked exactly. Yeah, so I think I would look at it in terms of that. And then for gold, I would look at the let's say Dow gold ratio historically. Like in 1933, it bottomed at 2. 1980, it bottomed at 1. So that's how I would look at it in terms of price target just for silver. I mean, looking at that cup and handle formation I spoke about, if you look at it on a logarithmic chart, the target is like around 600, but some people talk of much higher prices for silver, 600. But I try not to. Yeah, it's interesting to speculate on the price, but yeah, in the end of the day, the market will decide. It's really hard to predict the exact price, but I think there's still a lot more to go on the upside for silver.
Well, from your mouth to God's ear on that one, we shall see. I also have learned from your background that you're very involved and knowledgeable about interest rates, including commodities and so on and so forth. What's your current thinking on? Well, I guess we look at the U.S. dollar currently. We're talking about 4.5% interest rate, pretty much across the board in our markets. What do you think the outlook for 2026 is in terms of U.S. Interest rates?
Yeah, I mean, my background is in the bond markets. Working in the bond market, that's what you follow, the interest rate and the bond yields. And you look at the economy, the geopolitical risk, inflation risk, uh, and the U.S. Treasury market and all the other government bond markets. They were in a bull market from the early 80s until 2020, which meant that yields and interest rates kept going lower. We had lower highs and lower lows. And that's what drove this big asset bubble, real estate bubble, because prices go up as yields go down. House prices go up because people can borrow more because mortgage rates are lower, so they can bid more for houses. Same with the stock market. But nothing ever lasts forever. That 40-year bull market in bonds, I think, is over. It was over, in 2020, the bottom there. I think the 10-year yield got to 0.3. That was at the heights of COVID. And now we're at like 4, I think, where is it? It has been as high as 5. I think it was late 2022. It's been able to consolidate, but I think going forward, unless the Fed comes in and starts buying a lot of these long-term bonds with QE, the yields are going to go a lot higher. And if they do step in and try to control the yields from going higher by buying the treasuries, then the dollar is going to go further down versus gold and silver because people are going to realize this is just inflationary. They're just buying with funny money. And they're buying against the trend as well, because I think we're in the bond bear market now. And that's probably why they announced in their last FOMC meeting that they're going to be buying 40 billion now in QE every month, but more on the shorter end, which they can control better. The 1 month
Yes, yes.
T-bills, they can control that better, but not the long-term yields. So yeah, might still be safe to be in short-term T-bills, but the long-term treasuries, I don't think they're going to be as safe. So not a good outlook. And that doesn't help Uncle Sam, because that means that he'll have to refinance a maturing long-term debt at higher rates. And we know that budget deficit, still running near 5.5, 6%. And we just saw yesterday President Trump announce he wants to increase the military budget by 500 billion a year.
God.
That will put pressure on the budget deficit, even though he says he's going to get that from tariffs. But I'm not too sure that that's achievable.
I mean, I mean, the whole deficit situation, in my mind, in the United States, is maybe one of the most important issues of what all the financial markets do, and maybe the biggest reason for that, near term, could well be what's going on in Congress with the budget negotiations for the fiscal 2026. Have any sense on? Do you think there's any chance that the U.S. government or the Congress will be able to get any substantial cut in the deficit from what we're around 2 trillion a year out of these negotiations? Or do you think we're pretty well locked into another deficit of maybe even higher than 2 trillion?
Yeah, I spoke to Congressman Thomas Massey a few months ago, actually, on my channel, and he's been highlighting that problem. And no wonder President Trump is opposing him so much now because he's brought that up, and he thinks that basically we're still in the U.S. They're still following the Biden budgets. Nothing's changed. Deficits are going to be for the next few years are not going to improve that much. And yeah, and now talk of this 500 billion, that makes it worse. The other thing that's hurting, and especially now after what happened last week in Caracas, I think the rest of the world is becoming more and more how can I say, rattled by what the U.S. is doing. And what that's going to lead to is countries are either going to start selling their treasury reserves or they're not going to be buying as many going forward. And that will put even more pressure on treasury prices, and that will push yields higher. Why would the Chinese or any other country that is not closely aligned to the U.S. want to park hundreds of billions in treasuries when the current administration can do whatever they want? They can even break the Constitution of the United States, let alone go and like kidnap a foreign president. So they could very easily just freeze your treasury reserves. And I think it's one of the reasons why gold is going to keep doing well, because gold is the anti-dollar.
Well, I'm interested also, since you bring it up. It's just happened, of course, this whole situation with Venezuela. What's your guesstimate on what the final result will be? How likely do you think it is that the situation with Maduro, et cetera, will get the United States into another of these endless wars kind of thing versus uh, hopefully being able to keep our connection with Venezuela out of having a lot of U.S. soldiers actually involved. Which do you? I mean, it's obviously an early guess because it's happened so recently. But how do you think it's going to work out, the whole connection between the U.S. and Venezuela?
Yeah, like you said, it's still early to know. I think the easy part was taking him from Caracas to New York, and now the tough part, from what I've read and what I've seen, is that the Trump administration, they don't really seem to have a plan, right? They're just going by instinct. And I was reading today that a lot of the big oil companies and private equity groups, they want guarantees from the U.S. government, i.e. from you, the taxpayer, to go back into Venezuela and start investing there, because they don't have any faith in Venezuelan rule of law either. And in terms of war, yeah, I think it makes it even more probable that things could heat up in terms of kinetic war, especially against China. I mean, I think it was yesterday they took over a Russian tanker in the North Atlantic. I don't see the Chinese, if they try to do the same thing with a Chinese vessel, I think the Chinese wouldn't be as like calm or not reacting as much as the Russians. So yeah, unfortunately, it increases the possibility of major conflict around the world. And even Europe now is worried because President Trump is talking about taking over Greenland, which is part of Denmark and part of the EU. I don't really see the Europeans rising up to fight the Americans, though. So I think Yeah, it's a strange situation in the world right now.
Yeah, I agree with you, and I also think a lot of the strangeness or difference is really based to an unusual degree on one man. We're talking about Donald Trump, and there have been so many examples of where he's kind of gone against what is the past sort of basis for foreign relations. I'm interested if I could switch the subject again because I'm interested in your being in England and knowing a lot about England. What do you think is the outlook for England, both, I guess, politically, but also financially, if back in part to interest rates? I'm kind of intrigued. I haven't recommended it currently, but I'm kind of intrigued, for example, maybe in going short the gilts.
Yeah. Yeah, no, I think the gilts are yeah, they're on the same path as treasuries. You know, we're gonna see higher yields. I mean, they're trying desperately to keep it um, under control, and they've kind of succeeded right now. But uh, the gilt yields, the 10-year and the 30-year, they're pretty much where they were back in 2022 when they had that. Don't know if you remember the Truss and Quartang crisis, where gilt yields spiked and the pound almost dropped 1 to 1 to the dollar. So, and the problem with the UK is we have a left-leaning government or socialist government, and yeah, they think that spending money to support the public sector is the way you grow the economy, and they're punishing the private sector and taxing the private sector, regulating it. So, unfortunately, yeah, it doesn't bode well, in my opinion. And yeah, and we can't. I mean, we don't have the major reserve currency anymore, so we can't print and borrow as much as the U.S., which in a way is not a bad thing. And maybe that's why yields have stayed pretty steady. But I think eventually they will succumb because the party in government, they call it the backbenchers, you know, they're very left leaning and they want more spending and more borrowing. So yeah, I wouldn't be long gilt. So I agree with you.
I'd be also interested, maybe this is a good time to kind of ask you as I'm obviously a very interested investor, are there any other major markets or investment ideas that you feel strongly about one way or another that we haven't gone over? Maybe I'll just kind of turn it over to you if you have any thoughts in that area.
Yeah, I mean, we've had 40 plus years of financialization, which means, you know, stocks, bonds, financial securities, real estate is done really well because the cost of borrowing kept going lower, and now it's turned. So what that means for me is that real assets like tangibles, hard assets, commodities, yeah, they're gonna do better in relative terms to stocks and bonds. So that's how I see the bigger picture. Aside from gold and silver, of course. So like
Uh-huh.
things like copper, all the base metals, even oil. I see oil doing better. Maybe even agricultural land, soft commodities. Yeah, anything tangible, I think, is gonna continue to do well. It might not have a some of them might not have a huge bull market, but I think they will outperform like the technology. They'll outperform like the general stock market, and especially the bond market.
Boy, you just mentioned a thing I shake my head about when you talked about technology because I guess we still call them the Magnificent Seven stocks. I don't know if we've ever been. I go back to the period back in the late 60s, early 70s, where they had something called the Nifty 50, which is a similar situation where a small number of stocks got to valuations that, in my opinion, turned out to be right, were just out of the question, and I have the feeling that well, it's a good question to ask you again. What do you think the odds are that, say, in 2026, we get a major break in the American stock market, in part due to all this stuff with the Magnificent Seven and so on?
Yeah, and also the AI mania, I guess.
Yes.
But I guess, yeah, these bubbles, I guess we can call it a bubble. They always seem to go on for a bit longer than we expect. Like Greenspan, I think he made the irrational exuberance comment. Was it 96 or 97? And it kept
That's right.
going for another 2 to 3 years. So,
Yeah.
yeah, I mean, it's one of the things I agree. The only, like, opinion from John Maynard Keynes that I agree with was he said that the markets can remain irrational for longer than they can remain solvent. So
That's right.
that's the
That's
only
right.
thing, this AI thing could keep going for a while longer. But it doesn't mean that AI will be over once it bursts. It's just it will be just maybe like the dot-com bubble. It burst. Amazon's still around, but
Yes.
of course, a lot of small dot-com bubble companies disappeared.
Yes.
Yeah, and the other thing about AI, it's driving U.S. GDP growth quite a lot. That's probably the only reason why GDP looks good, with these data centers being a big part of GDP growth.
Yep, this is good, and I appreciate also you're mentioning the hard commodities and things like copper is an area that we'll be looking more closely at, and maybe the next time we talk, we can talk more about that. Was there anything more that you wanted to add to the conversation? That's been very helpful from our standpoint.
Well, no, I mean, in terms of the markets, yeah, and maybe gold and silver is, I think we still have a long way to go. But it's going to get choppier. So people who are in gold and silver, I think they need to be like even keel, or like with every market, right? Just be even keel and don't use leverage. I think that's important, because you use leverage, you could be right about the market, but then if you get like some kind of correction, it wipes you out. So yeah, don't leverage.
I appreciate your comments. Thank you so much for having this interview, and let's cross our fingers on both of us that we can figure out what's next in the financial markets.
Yeah. And I enjoyed speaking with you, Bob.
Thank you, Mario. Thank you.
You're welcome.